Sir.
Let's talk about Delaware financial institutions, and as the lone member of the U.S. House of Representatives, whether you would always vote the way the financial institutions in Delaware want you to vote, vis-a-vis maybe standing up for a consumer. Arguably, the consumer side might be a bit different. We saw with Ted Kaufman, who didn't have to run for election, he sometimes did not join the Delaware choir, voting always financial interests first. If you each could address that tension between financial institutions and consumer interests.
Mr. Carney, the first response is yours.
And that is a real tension. I said just a minute ago that part of my job is to protect Delaware business advantages, and financial institutions are a big part of our economy in our state. But I've also proven that I'm willing to and will stand up for consumer rights and for setting the rules, regulations, so that we have a balanced field when it comes to financial regulations. The Republicans on the Financial Services Committee, on which I serve, repealed foreclosure assistance programs. I stood up to fight so that didn't happen on the behalf of homeowners. They wanted to defang and eliminate the Consumer Financial Protection Board. I didn't vote to support them on that. They wanted to defund the SEC. They wanted to roll back regulations. They want to roll back the Dodd-Frank regulations, frankly, that protect our financial system and investors, and will prevent the kinds of things that got us into the mess in 2008. So my votes show that I stand up for consumers and I stand up for having appropriate regulations for our financial services industry.
Thank you, Mr. Carney. Mr. Guesty.
Well, when I go to Congress, I'm going to be representing the people of Delaware, so I'm not going to just listen to whatever our financial institutions, would like me to do. I'm going to listen to hear what they have to say, and we'll link it up with what is good for the people of Delaware and the consumer interest. But we need to be very careful with how much the federal government gets more involved in our financial institutions. We did have a very bad crisis. Dodd-Frank was, I believe, a knee-jerk reaction to that financial crisis. The market is a lot more vicious when it comes to taking care of companies that do the wrong thing. We bailed out Wall Street. We shouldn't have done that. We should have let more companies go bankrupt. So now we have Dodd-Frank. I can speak from experience that it is putting a heavy regulatory burden upon our institutions, just trying to comply with it, just trying to understand it. So when it comes to working with financial institutions for the citizens of Delaware, I'll do so, but we need to be very careful how much we do it.
Mr. August.
First off, we wouldn't be in this financial mess if the Democrats during the Bill Clinton presidency didn't repeal the Glass-Steagall Act of 1934 that separated commercial banking from investment banking. We wouldn't be here talking about this. Second of all, the regulatory scheme syndicate that was in place was working pretty damn well good because it kept the financial banksters and their investment banksters from robbing our treasury for themselves and putting millions of people out of their homes with bad financial and corrupt products. Second, since this crisis has gone on, there hasn't been really any prosecution of these banksters and their Wall Street fraudsters. Not one. There has been a selective method of doing it by settling out of court. These people should be in jail, their property seized, and their assets returned to the public.
That's time, sir. WDEL and WSTW HD3 in Wilmington. Now, you are listening to a live debate, an election watch debate between the candidates for U.S. House, live from Widener Law School in Wilmington. That's some housekeeping. Mr. Kovac, I did not forget about you. Time is yours, sir.
Thank you. Talking about the tensions between protecting the citizens and protecting the banks, it's the job of Congress to make sure that that tension is resolved. But we can't do so by changing our approach. I'm troubled by Congressman Carney's inconsistent approach to states' rights issues. First, we need to federalize and have a control over gambling, and then yet now we need to have Delaware free to have its corporate governance governed by its own states' rights. We need to pick an approach and stick with it. We need to make sure that we support our state and its ability to make its own laws that govern our function in Delaware. We need to make sure that we fight against federal control of corporate governance in Delaware. We need to protect Delaware's advantages by protecting Delaware's laws. We need to fight for our fair share, but not fight for a federal system that somehow gives us an advantage. That's what's wrong in Congress. Everybody's fighting for their own state instead of fighting for the best interest of all our citizens. We need to balance these tensions. We need to bring balance to this.
That's time, Mr. Kovach.
Yeah, thank you.
Yeah,
Anything further? We
Yeah,
can certainly do
I
that.
would like to make a point there, and that is that there are significant differences between the Republicans and the Democrats in Congress and on the Financial Services Committee in particular about what caused the near financial collapse in 2008 and what we should do today. My Republican colleagues believe it was caused by too much regulation. I think any fair assessment of the situation is that we didn't have the appropriate regulations in place and that we took too many regulations away. In fact, folks have testified before the committee in the financial services industry that that's the case. They need rules of the game that are clear, that are easier to understand, that create a level playing field for everybody. That's the kind of regulation that I support. In the meantime, the Republicans on the committee, they want to repeal Dodd-Frank. They believe, as we heard from Mr. Jesty, that it is creating problems across our financial system. The reality is we're going to have stronger banks. They're going to be better capitalized. They're not going to be able to take the kinds of risks that they did prior to 2008. And I'm going to work to make sure that that happens as a member of the committee.
Who else?
As far as the Dodd-Frank goes, what we have is a system designed to, and this is a quote from a law professor up in New York, designed to have bureaucrats enable more regulations. As a matter of fact, what it doesn't do is it doesn't address the private funding. It doesn't get private investment back in the mortgage business. What it does is it keeps the government as the monopoly in the mortgage business. You know, oh, we can't have 30-year mortgages without the government. Well, let's try by getting the government out of the mortgage business. We need Glass-Steagall. Congressman Carney has said he will not institute something like Glass-Steagall because it's unfair to our financial institutions. Well, you know what? We have to have the balance to protect consumers. We need Glass-Steagall to protect against the abuses that happened that led to this meltdown by separating investment banking from commercial banking to allow commercial banks to provide the capital and the access to capital our small businesses need.
Mr. August.
Again, if you vote Democrat, you will not change anything in Washington about this banking industry. Banking industry runs Delaware. The Democrats and the Republican Party both take corporations and banking money. What's just one part of the problem? The corruption in Washington. Two, we have given the banks trillions of dollars. Where did it go? It went offshore. It didn't stay here, and they're tying the money up because they don't want to let the money go for mortgages and refinancing of houses. Now, I spent a year on Spencer Plaza attending the mortgage foreclosure hearings, and I've had people who are willing to negotiate their interest rates down because of the bad financial products as adjustable rate mortgages
That's time,
and the
Mr.
other
August.
corruptions.
Mr. Guesty, 60 seconds to you.
Yes, the financial crisis was partially created by greed, but it was also created by an out-of-control Federal Reserve that was manipulating the value of money and credit. They were handing out free money to the banks, and they were telling them to go and do what they want with it. I remember very distinctly George Bush saying that we are a nation where everybody is a homeowner. We had the highest homeowner rate available, but that wasn't true. We had the highest mortgagees in the country. And when it started to pop, when the bubble started to burst, we were starting to see the liquidation of all this bad debt. And we didn't let it liquidate. So we still have this problem. The Federal Reserve now is cranking out QE infinity to the tune of $40 billion a month. And they're not just funding our national debt with treasuries, they're buying up mortgage securities. And if the private sector isn't buying up these mortgage securities and the government is, that causes me great concern. So look to the government and the Federal Reserve to see where your mortgage bubbles are coming from.